comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hello, we are back for another episode of Final Settlement. I am here joined by Mitch, as well as Dhruv and Himanshu. Fellas, do you want to introduce yourself?
Absolutely. So, hey guys, I'm Himanshu, the co-founder and CTO of Arch, and I'm joined here with Dhruv, my co-founder.
Yeah, hey guys, Dhruv here, co-founder, CEO of Arch. And the focus of Arch is really on providing high-level financial services for people with Bitcoin and crypto broadly. The main product we have is over-collateralized loans against crypto assets where we don't rehypothecate collateral, and it allows both individuals and institutions to access liquidity without needing to sell and all the tax and other implications that come from that. And so we're happy to chat further about some announcements that we've had together.
Wonderful. Yeah, and Mitch, I think there was something you wanted to speak about with the recent partnership.
For sure. We announced last week partnership with Arch to provide Bitcoin-backed loans to our clients. We've heard for months the need and constant request for our clients to access that liquidity, whether I'd say primarily because they didn't want to sell their Bitcoin and wanted to purchase something, didn't want to take the capital gains hit, and the response to the partnership has been I'd say overwhelmingly positive. Both the support they're getting from the Arch team, the white glove service, as well as easy to use product. It's been great thus far, and couldn't be happier with the relationship.
So why is there so much demand for Bitcoin-backed loans?
So if you look at Bitcoin over the past few years, it's been a very well-appreciating asset. It's one that people have considered now for a lot of use cases a store of value, right? So when you have something like a store of value in the traditional, you have stocks, you have bonds, you have houses, or other forms of real estate. You go leverage that to fund other needs that you may have, whether that's investments, whether that's cash flow, whether that's any big purchase that you have. You need to borrow against the assets that you own because that makes you more creditworthy. In the same way, with Bitcoin, you come borrow against Bitcoin. Bitcoin, in our opinion, especially as lenders, is pristine collateral. It is you never have to mark to market. It's priced 24/7, 365. The market never stops, and you can always know exactly where you are as a borrower and as a lender in a Bitcoin-backed loan. We've been fortunate enough to be doing this for a few years and have learned a lot about the business, even more than we came in with, and have learned about the wide variety of needs for borrowers. And we've actually seen a number of interesting borrowers already with the Onramp partnership who've been able to benefit from this and go make other investments or use it for other purposes.
So how does it work?
Yeah, so essentially the way it works from start to finish is you go through, and maybe I'll speak about it as Arch specifically, and then we can talk through like how the partnership looks like. But folks would come to our website, create an account, and from there you configure your loan where you tell us how much Bitcoin you have or what loan amount you're looking for, and it'll tell you the amount of collateral that you need to deposit. As you go through, you electronically sign the loan documents. We spell out your interest payments and everything else associated with that loan. You also pick your duration. And one of the unique things about Arch is we go up to 2 years fixed term, which no one else in the market does. And so once you've finalized all of that, you send your Bitcoin collateral over to our custodian partner. We work with Anchorage Digital, who's a federally chartered bank and a U.S. qualified custodian. And once that collateral is received, we disperse you the loan. You can get the loan in dollars into your bank account or in stable coins into a crypto wallet of your choosing. And from there on, you're free to do what you want with your funds. And then once you pay off your loan, your collateral is sent back to you.
I think, Liam, one of the key considerations why we did this partnership and why customers feel comfortable with using Arch for Bitcoin-backed loans is we don't rehypothecate assets at all. So we don't touch your assets. Your Bitcoin is yours. It's sitting segregated in custody. And we can talk more about what we plan to do there in the future later as well. We are US regulated in all the states that we operate in. So you have the comfort of the regulation. You have the comfort of us not rehypothecating assets and keeping your assets completely segregated. So it's a very safe, traditional way of doing things, which combined with the high level of customer service, in this case, both from the Onramp team and the Arch team, people feel very comfortable using this for a lot of their needs.
Yeah, I'd say like while, as far as easy to use, the comfort is certainly there. It's a delightful experience. Why we chose you guys as, a partner to launch here. Number one, it was the no rehypothecation and, firmly stating, keeping that stance, I think is important. The segregated on-chain addresses is a delight for our clients. But the important thing that, I'd say particularly looking at the lending market the last couple of years and, the failures with, your BlockFi's and Celsius's was, really the bankruptcy remoteness and ensuring our clients' Bitcoin remains theirs. Regardless of, anything that happened to Anchorage, you've got the insurance policy, you've got bankruptcy protections in the trust. Anything happens to Arch, you've got a backup loan facilitator that would, take upon the loans. It is fairly bulletproof, and which was important to, our product is a deep cold storage product. It's, it's in place to ensure that you pass down your Bitcoin to, to your family, your loved ones. We've got inheritance built into the app. That story needed to mesh well with the partner that we ended up launching with. So, and was the primary reason we chose you guys was because we believe that Bitcoin, first and foremost, that Bitcoin needs to remain theirs.
Yeah, that's actually a great point because our vision always has been to be there for the long run. We want to be your banker till the end of times. And you guys have the same vision. So I think it gels very well with how we approach our clients, how we take care of them, and also how we structure our products to make sure their assets remain with them for a long time and beyond.
And we've certainly seen the care. I think one of the important things we do as a firm is, so many of these companies in the Bitcoin space, there's no one to call. And at Onramp, you always get a face, you always get, a human to go talk to, helping with onboarding, helping with transfers, helping, any questions they might have. And for you guys, it's exactly the same. The support is there, very much, 24/7, for, anything from test transactions into wallets, test transactions to receive, collateral if it's USDC. We've seen, weekend, night support. It's been a delight for our clients.
Yeah. And I think that's been a key focus area for us is that client service where, even if you're not an existing client, you can book a video call and someone from the team, we're a US-based team, will get on the call to walk you through how everything works. And from there, our product is quite intuitive. And so most customers are able to do everything without talking to us. But should they need, they can find it in various points throughout the whole experience.
Yeah, it's a great solution. I mean, trust is paramount in this. And it seems like you guys have built a fairly resilient product with it. So wonderful. I guess just tell us a little bit about your existing customer demographic. Who finds value from this? Does this make up the entire Bitcoin-backed loans? Do you think you're similar to the rest of the ecosystem, your specific demographic? And who do you see benefiting from this in the long term as well that isn't an existing client?
Yeah, I think it's our customer demographic is fairly unique, I think, compared to other lenders. We're slightly more upmarket than the base level of retail, although we do allow people taking loans anywhere from $1,000 and up. Our average loan size is well into the six figures, and we serve everything from individuals all across the country to someone higher net worth as well, to all the way to a lot of Bitcoin miners, hedge funds. We have public companies that borrow from us. So it's really a wide variety. And I think that's enabled by our software and by the customer service, where the software makes sure that if you want to take a loan, you can have the loan fully configured, collateral received, funds dispersed while we're having this conversation here without us being in the loop at all. So you have that speed, and then you also combine that with the white glove customer service where like you can have a conversation with someone on our team instantly via chat and within, if not a couple of hours, same day on video or on the phone.
Interesting. And who else do you see that doesn't currently benefit from this, picking this up in the future, that doesn't currently, that thinks it's a little too risky or, isn't quite there yet?
Yeah, I think it's probably not like who else, just given the segment Himanshu described is so broad, from individuals to companies, whether you're a small public company or even a small private company or even publicly listed. I think the bigger thing is more on education and just making people aware that this is an option. People are comfortable borrowing against their assets broadly. You look at mortgages, HELOCs, borrowing against stocks, and all of those options that are available. But this is really just more about making people aware about, hey, you can do this with your Bitcoin, hammering home the non-rehypothecation, because I think people are sort of concerned over the failures that happened years ago. But these are more of the points that we emphasize as opposed to being able to go to a net new audience, because I think it's applicable to everyone. We see it in our current demographic, and it's more so just hammering home why we're sort of a safe, transparent option here.
And like, as far as, new clients, I spoke to 2 clients today that were both buying homes, and they were, they didn't want to sell their Bitcoin. They didn't want to take the gains. And, one, was ready to go do it day one. The other one wanted to, create the rails and get it in place for when they close on the house. Like, these are very real needs that, if someone may not have any history taking out these loans, but needs it in place because, they're going to have that financial, event that comes to them. And, I'd say having something in place there is important as they're making that decision going through the process.
I think Homebank is actually a great example for why this partnership also makes sense for a lot of your customers and a lot of people who are buying homes in general, because most lenders will go maximum up to 1 year. A lot of the bigger lenders go a few months only. We go up to 2 years on a fixed term, and you can keep rolling over into a new loan at the end of those 2 years. So you can, in theory, so there's a very popular saying in the private banking world, which is buy, borrow, die. You never sell your assets, you just keep borrowing against it. And you can do that here. So you have a line of credit with us where, as the collateral appreciates, you can just borrow more against the same funds. You can always add collateral and borrow more anyway. And then you can keep rolling it over. So you don't have to pay the principal back. You can keep rolling over your loans. So for a home buying use case where you want to actually pay it out over a number of years, not just in the first year, there's a lot of benefit to a structure like this, which lets you borrow in the long run.
Also, if you don't mind getting into, I'd say most lenders in the space are more open term and can call back, those loans at, any given time of, market fluctuations or that USD's callback. Can you get into a little bit about like the credit facility that you guys have and how those loans are sourced?
Yeah. So I think like there's a few things that are important to call out here. One is where the capital comes from, right? And so if you look across the industry, some people are taking in capital from more retail and then lending that out. Some people rehypothecate your Bitcoin, and that's where like capital comes from. And so for us, because we don't ever touch client collateral, we've raised a CLO facility, which stands for collateralized loan obligation. And this was led by Galaxy Digital, but we'll very soon be announcing other well-known institutions that have participated in the mix. And so our capital comes from that financing source, which is very common in the traditional financial world, where you have like personal loans and all sorts of other types of products here. That allows us to then give out loans at fixed rate and fixed duration without needing to worry about, I need to call the capital back from a given borrower, just because we have this separate structure that's fully for loans.
Yeah, we actually don't have the ability to call back loans, which is great. So like we're not even allowed to do that. And our capital is a much longer duration than the loans that we give out. So we're always going to guarantee that we're not going to have a duration mismatch, which would necessitate a capital call.
And like those terms, that structure you need to go make financial decisions that, like buying a house or making, another investment, like to have the assurance that duration is not going to be there and that capital is going to be called back when, FTX happens and, markets crashing, when like, it might be hard to actually pull that, get that liquidity somewhere. It makes a dramatic difference, to our clients and like truly, a partner that we wanted to go with.
It's a completely different paradigm. Like you mentioned open term loans, right? The max callback periods we've seen on open term loans from other lenders are like 3 months. That doesn't let you plan for real financial decisions.
Wonderful. I guess you touched on it briefly, but can you talk a little bit more about how Bitcoin is pristine collateral, both the liquidity, the custodial nature of it, and your view on this relative to other asset-based lending options that there are?
For sure, yeah. In fact, now there's been a lot of focus on Bitcoin in the US, as you know, with the new administration. Bitcoin is very clearly a commodity. It is the most pristine collateral for a lender for a number of reasons. We don't have to, as I mentioned, mark to market a house, which you would have to price every few months or every time you refinance. We don't have to worry about what the price is going to be because Bitcoin trades 24/7. In a stock-based margin loan, which you get at Schwab or somewhere else, you could actually be underwater as a lender if the market opens super low the next day, right? That doesn't happen here. We always know that it's trading at a certain point. If in a very bad situation, you do have to liquidate a portion of collateral, you can do that while that's happening because the systems are fully automated. A lot of other lenders don't have automated systems, but ours are. So as a lender, there's no way for us to have a loss. But as a borrower, you also know that things are very transparent. Everything that you see is the same thing that we see. We don't have any extra information or anything else on you beyond what the price of the collateral is. And that's what defines the loan, and all the terms are stated out at the start. So Bitcoin, as you know, trades very significantly every day. It's a very high market cap asset, and we only see that going higher as nation states, other institutions come in. So I would say we're still in the very early innings of credit against Bitcoin, and this is just going to be a much, much bigger industry as the years go by. And the reason for that is that Bitcoin is going to continue to be perceived as pristine collateral by everyone who wants to collateralize it or lend against it.
Yeah, agreed. I think we've definitely seen more demand from potential borrowers for Bitcoin loans rather than lenders at this moment. Obviously, the lenders are moving a little bit slower as well. And so, at this point, there are still some people that think that the interest rates are a little bit too high, just given where they've seen loans for a bunch of different other asset classes. I guess, could you speak a little bit to that and where you see the market going moving forward?
Yeah, I think one is also important to step back from the past few years where we were in a more of a zero interest rate world. And so even right now, when you have mortgages sitting at 7%, we lend out anywhere starting at like an all-in 14% up to like 16, and a variety of it depends on the duration you're choosing, the loan size as well. And so there's not that big of a difference there. When you look at personal loans, even if you're a prime individual, can be in that ballpark. Borrowing against your stocks at some brokerages is also close to the double-digit mark. And as Himanshu pointed out, it's important to also note this is still early as an industry. And so as we continue, and we've been having conversations with banks to partner as well, you'll see the costs come down and sort of the rates that are passed on to borrowers come down as well. And so you could expect to see that from us as well going forward. Is we're always working on how do we lower the cost of borrowing to our end customers.
It's actually very simple maths, right? We have a facility with a certain amount of dollars in it. We'll soon be announcing an upsize to it. As that value grows, the cost comes down. That combined with rate cuts from the government and just people's comfort with this as a lendable asset class, in our opinion, this is a very great opportunity for people, institutional lenders that want to earn yield, because this is structurally a zero loss loan product. So it's not like other loan products where you have to go claw back or go get your funds back when you're underwater from a borrower. In this, there is no way for the lender to be underwater. So that risk premium is it has not quite been priced in yet. And over the years, as this becomes more mainstream, I think it will get priced in, and the rates will come down significantly. So
you glossed over the zero loss loan product. Can you explain that a little bit more to those folks who may not be quite as familiar with that?
Yes. So I'll use the numbers we have here, right? So in our partnership, borrowers can borrow at 50% loan to value or anything below that if they want to be even more conservative. There's a margin call at 70% as the price of Bitcoin drops. There is a period of 24 hours for borrowers to then add some more collateral or pay back some more principal to bring it back down to a healthy LTV. We do work with borrowers who are traveling, etc., and need some more time. At 80%, there's a partial liquidation, again, just to bring it back to healthy LTV. So in all these scenarios, the LTV is never going to touch 100%, which is when you break even, and then above 100%, obviously as a lender, we're underwater. So that doesn't happen, and it just keeps the loan book healthy. It keeps the borrowers never delinquent, and it helps us, obviously, as a lender, manage a healthy loan book.
Yeah, and maybe the one thing I'll also add, going back to the rate, is you're also part of the rate is for non-rehypothecation, right? So there are costs to just storing Bitcoin securely at Anchorage, and for a lender like us that never touches client collateral, there is just a premium associated with that.
Like there are probably options where they're maybe a percentage point or two lower than us, but read the fine print, they rehypothecate, and your assets are not in custody. They're getting put to work to get yield, which is why they can offer you a lower rate. We don't do that, and we've learned from the failures of 2022, and don't plan on doing that.
Your Bitcoin becomes the liquidity to go issue other loans, which, time and time again, we learn that doesn't work.
Yeah.
So, that's one of the very important reasons why we went with you guys. And one thing I wanted to harp on, which, a reason why the partnership works so well, and, why we wanted to add lending, to our offerings as well, is, the ability to work hand in hand with you guys in a margin call scenario, a, potential liquidation scenario where, if we have a client that uses us for deep cold storage, and we've gone through that process, over, the last week too, of, if a withdrawal needs to be made, working hand in hand with you guys, keeping you posted the whole way. We need 2 verifications, both with Onramp and with BitGo, is our typical process to go move funds. Takes some time. For our clients, we're talking with you guys, keeping you posted the whole way, so that that withdrawal client doesn't get liquidated, and that withdrawal can get processed. We also, we've got all of the margin call levels for our clients and their loans. We contact them before, even those levels are breached before your emails go out, so we can signal to them to get ready and just be aware that this could happen.
Yeah, and you guys have the dashboard with like all the reporting on the user and loan level on where the LTVs are, so you know exactly what's going to happen and can almost anticipate these scenarios happening.
Exactly.
I guess, where do you guys see financial services on Bitcoin going in the future? I know Bitcoin's less than 2 decades old, so we're still a bit early, but where do you see this going over the next 5, 10, and ultimately longer time frames?
Yeah, I think we're still in the early innings, right? Like today, you can borrow against your Bitcoin at some avenues, but very restrictedly, you can get yield against it. There's not much more you can do. There's structured products that could be brought in here. There's more safety on the custody side. We've seen a lot of hacks and such recently, and that actually speaks well to your product, where you have another layer of safety on custody. So clients are really ensuring that their assets are safe, and with this partnership, at some point we'll get to that as well on our loans with you guys. So that's, I think, very vanilla, obvious things that could happen. There's probably a lot more you can think of here.
Yeah, I think maybe one of the other interesting things that, again, is even more nascent than lending against Bitcoin is packaging up with other asset classes. I know people are looking at real estate and Bitcoin together, and maybe lending against a combination of both of them, but still really early there. And I think a lot more to come over the coming years, just as lending markets evolve here.
I'd say it's also, talking about early, this is the first announcement we will have with you guys, and
of course,
our partnership we intend to be long term. There'll be other products and services, that we roll out. First, I think soon, we'll have the ability to show, loan details and deposit addresses, collateral addresses in the Onramp app. But eventually, and it's been asked from our clients to put these loans on multi-institution custody, where the funds can get all the benefits of having multiple custodians protecting those keys. But that said, we're both building towards that vision, and looking forward to announcements there in the future.
Of course.
I guess one of the things that a lot of people have been speaking about, at least in the recent times, is just the repeal of SAB 121 and larger asset managers being able to hold Bitcoin on their balance sheet in a way that or on behalf of their customers, in a way that makes more sense for them. Have you seen, I guess, any early interest on that side, or any you mentioned a few large lenders that were now getting a little bit more interested in actually being the lender side liquidity on that. So I guess kind of have two questions there, which is one, how do you think that's going to work with banks holding Bitcoin and other digital assets on behalf of clients? Will it be sort of collateral, like rehypothecated, just like dollars at typical banks? Do you think they're going to be a little bit more thoughtful with that? And will that drive additional demand on the lender side for Bitcoin as well?
Yeah, I think like banks have also had the sort of benefit of learning from all that's gone through in prior cycles. And so I would imagine that they are not rehypothecating the collateral that's held. It certainly is now easier for them to enter and hold Bitcoin. But I think it's still too early to tell how they'll do it, whether they just partner with existing custodians that are out there, whether they look to build it in-house. And, that's just custody. There's a whole variety of other financial products on top. Like when we think about lending, we've spoken to a fair amount of these institutions to figure out how do we partner together to power these types of products for their end customers. And so I think, one, there are like layers to the Bitcoin financial products. Custody is like the earliest one and the first one that makes sense to start with. But even then, it's unclear whether there's going to be a partnership or these banks will look to build it all in-house.
And like we talked about this a few weeks ago, like the risk teams at banks,
are extremely conservative.
They're extremely conservative, and to go build something in-house for an asset that if you don't have the right procedures to go secure, can quite frankly just disappear. They haven't been used to dealing with something like that. So for them to get comfortable with custody, with lending, like it's a new sort of ballpark for them to explore and get comfortable with. And I think with SAB 121 getting repealed, everyone expects the banks to go jump into the space day one. It's not going to happen. But it's interesting working with a firm like you guys, where to provide the liquidity to an existing solution where you guys have the reps. You guys have proven this model out, and it is bulletproof from a bankruptcy remoteness scenario. It's a good story to explain to those large pools of liquidity that they have, and provide additional yield for their clients, or different ways to leverage that capital for them. This is a potential way that they can plug into this the Bitcoin ecosystem, digital asset ecosystem, to start to build products and services, and leverage the potential that we have here.
Yeah, without revealing any names or too much here, we do an announcement coming out in a few weeks, which will add some more color to this, and maybe mention people getting involved as well.
Wonderful. Anywhere else you guys want to go with this? Any feedback from the Bitcoin Investor Week thus far? I know we're still a few days into this, but any key takeaways in terms of?
I think you guys have gone more than we have, to be honest.
Yeah, I'd say that the takeaways is, number one, it's overwhelming seeing the attendees for the conference, how full the rooms are, how full the sessions are. Watching this conference grow has been wonderful.
It was one day last year.
Yeah, and now we got the full week, and it's you go on Bitcoin Twitter, and everyone's panicked, it's doom and gloom. Price is falling. You walk into these rooms, and you're seeing large traditional finance firms. You're seeing industry stalwarts, and they're not concerned. They're building, and it's pretty enlightening. From where this asset class is going, that they're not worried about the sky falling. They're not worried about the price situation now, because they know what we're building towards, how early this actually is, and as both a Bitcoin holder, Bitcoin builder, it's I think it's mostly up and to the right for for this industry.
Yeah. And one anecdote that may be interesting, maybe not. We actually met Mitch last year at Bitcoin Investor Day. Now it's Investor Week, but we met in that room, and it's good to see that exactly a year later we're working together.
Totally agree.
Exactly. Yeah, it's fascinating to see a bunch of big names there that you wouldn't have otherwise. I think there's a mix of, interest in the space. Some is very early and just personal, and others are pretty large financial firms that are trying to figure out how to do it thoughtfully. So great to see everybody kind of getting together and learning a little bit more. But yeah, as you mentioned, there's almost no discussion of actual price there, despite a little bit of a correction this week. And it's good to see people just kind of trying to create long-term products and services that everybody can benefit from.
Interestingly, there hasn't been much conversation outside of just Bitcoin as a whole. It's not been like, let's focus on the entire digital asset ecosystem. And obviously, I'm not talking about the speakers. I'm just talking about the side conversations people are having at happy hours or at different events. And it's just been like focused on Bitcoin and focused on like the growth of that one asset. And it's almost, I would say, in some ways, an asset class on its own.
It has, I'd say, from an industry perspective, from anything from when you're watching CNBC to listening to the opinions of traditional finance, banking industry. I'd say the Bitcoin only ecosystem has been screaming for the mountaintops that it's Bitcoin and it's everything else. And I think that opinion is starting to come closer to the mainstream.
Yeah, I agree. I would say outside of Bitcoin, though, I think other tokens have a little bit less attention at the conference. But one thing that people are getting and continue to be excited about is just bringing stable coins onto Bitcoin, just because of all the liquidity that's provided there. I know more so on the institutional side that are just super interested in being able to get the liquidity. Saw Bank of America's announcement recently, and sounds like Caitlin Long was teasing some announcement that's coming soon. So it'll be interesting to see what other liquidity can come into the space, just helping drive additional institutional interest in the space.
I mean, we see it with you guys of, where I to be honest, have been surprised that the default option, for not default, but commonly chose option for sourcing these, getting the dollars back for these loans has been USDC. And we're Bitcoin only product. USDC is certainly, I understand the use cases. It's it's very easy to use. It's quick. Our brand is Bitcoin only. Yet we've certainly the clients have chosen to to take that because they want the liquidity faster. So, I certainly, there's plenty of use cases for stablecoins, but to actually, to see it in practice has, been fascinating to watch, and, looking forward to it being built on, Bitcoin Rails one day. I know there's a number of projects and a number of announcements that could be coming out there. I think you get resiliency, speed obviously is the issue there, and it's a hurdle to get over. But it's speed and the fee market too. But I'd say it's been interesting and seeing the delight on clients for how quickly they can source those loans.
Yeah.
Agreed. All right. Any final thoughts? Does anywhere you guys want to send anybody who's potentially interested in Arch or Onramp?
Yeah. I'd say if you're interested in the partnership, reach out to Onramp, via our website. You can message us. You can just call, schedule a consultation. We can walk you through the offering and what we combined efforts can offer our clients that we talked about here. We can get into more details.
Yeah, likewise. You can find us at archlending.com. Similarly, you can book a call, message us via our websites. We're also on Twitter, LinkedIn. Himanshu and I are personally available on all those platforms as well. Yeah, and
then we have a very simple link with Onramp, archlending.com/Onramp. Sign up from there. It's very easy. We'll know you're an Onramp customer. Even if you don't and you sign up normally, you tell us you're an Onramp customer, we'll make sure you're attributed as such. You'll get the benefit of both ours and Onramp's customer service. And look, this is a very early, it's a very early inning in a very long-term partnership for us, a very long-term industry. Credit as a function of this asset class is still very, very small, and it's going to grow significantly over the coming years. So if you're here today and you're already using this, or you plan to, you're joining something which is very useful very early and you're getting a very significant benefit. And if you're thinking about it, come ask us questions, come speak to Mitch and his team, come speak to us, and we'll make sure to answer everything to the best of our abilities, and then some.
Yeah, to that point, there have been a bunch of companies that have come and gone, and I really like how long-term approach both Arch and Onramp are in building these types of products in resilient ways. So wonderful, and that's great to hear.
Yeah, it's, at the end of the day, it's our clients' money, and if you don't have that long-term vision, you don't belong in the space. So both from long-term vision to the white glove services, I think both firms are going to be here for the long haul and have the right mindset.
Thank you for having us, Liam.
Wonderful. Thanks for coming.
Appreciate it, Liam.
Appreciate it.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.